Hi, my name is Joe Park, and I'm the CEO of Horizons Stewardship. I want to thank everybody who has joined us today for the Paycheck Protection Program loan forgiveness, what we know and what we don't know. I'm excited to have with me Stan Reiff. He's a CPA and a partner with the consulting group CapinCrouse. He is their consulting practice lead, and he has been with us for two very popular webinars that we have already done. This webinar is intended to build on those two webinars, and you can find them at giving365.com. The first one is called PPP Loan Forgiveness, and that is essentially Stan explaining how to do some of the basic calculations around forgiveness, at least as we understood it at that point. There's another one that's the Q&As that came from that webinar. We separated those two off into separate webinars. And then there's an interview that Stan and I did last Friday, Will My PPP Loan Be Forgiven? Dealing with certification questions and FAQ 31 from the SBA. All of those are there. We'll be making reference to those as we go through the program today. Also available on horizons.net are these 4 documents from CapinCrouse that go deeper into the discussion than we're going to be able to cover today in the course of the webinar, so that if you want to refer back to them, you can, and I think you'll see that Stan makes some references. So Stan, delighted to have you with us today.
Joe, thank you again for the opportunity to join you again on this webinar and to speak to your incredible audience about the PPP loan and the forgiveness and the latest activities that are coming out. So thank you again.
Well, Stan, we're not going to go backwards very much, but would you mind just summarizing the major points of the PPP loan program forgiveness in case this is the first time they've connected with us?
Sure. So let me just start really quick at a high level. By definition, each of those words in what we call the PPP loan are really critical. Let me start with the last word. It's a loan, not a grant. So a lot of times we tend to get confused by thinking because it could be forgiven, we assume it will be forgiven, or that, hey, it's ours to spend once we get it. So let me just remind everybody, it is a loan. It may be forgiven, but it's not automatically forgiven. So that's the first piece of information I want to make sure everybody clearly understands. And again, there's more specific information around that. Again, as Joe, as you've already mentioned in some of the prior webinars about the certification process for need, et cetera. But really 3 of the major gating decisions for raising the probability of forgiveness currently are these 3 bullet points. One is that of that PPP loan, you need to spend at least 75% of it on payroll and benefits for the program as defined, without going really clear. But it's not all or nothing. If you come in at 70%, there's, again, a calculation you can make to still have a portion of that forgiven. But a minimum of 75%, and that's the amount that would be forgiven under that program for payroll and benefits. Up to 25% can be used on occupancy and utility expenses for your organization. And again, these are thresholds, not ceilings. And then third, but not least, is from the date you receive the funding, and I want to be clear, not the date that you submit your application, not the date that your application was processed, but it's the date you receive the loan funds. And then again, 8 weeks is literally 56 days. So you start counting at that point. And those are 3 key components that you need to make sure you're evaluating and keeping frontal lobe in your conversations, in your documentation, and your decision making. There's a lot of other important information that's also in those other interviews and those resource lists of the 5 key things you want to make sure you're doing, the calculations that are very technical and very specific otherwise. But those are the high level things you want to remember.
Well, Stan, we began to discuss last week Steve Mnuchin's comments about audits for loans over $2 million. Then the SBA came out with this FAQ 31, which heightened anxiety with a lot of folks in terms of both loan certification and forgiveness. Just yesterday, I think it was, they dropped FAQ 43, which comments on FAQ 31. It tells you how many updates the SBA has already given. Stan, can you give us a little background on FAQ 31 as you see it today, and what the SBA's FAQ 43 yesterday, which is summarized down here under the answer question, what that means for us?
So FAQ really addresses in many ways some of the statements that Secretary Mnuchin talked about, and without going into detail, in particular, if you applied in good faith, received funding, and then under the clarifying points that are starting to come out through the FAQs, you now deem yourself to have not really been eligible, or you don't feel like you will meet the criteria, or you don't want it under the terms of clarification, but in good faith you signed up and received funding, you had until today to return those in good faith without any further action. Well, what happened is, it created more ambiguity. Well, what are the clarifying things we need to know? And the SBA hasn't provided those yet. So as of last night, again, and as you've mentioned, we're getting a ton of these FAQs, daily. But we're up to FAQ 43 actually just comments on this by saying, we're going to give you an extra week, and in this time frame of the next 7 days, we will issue more FAQs defining the ambiguity that we're asking everybody to respond to. So basically they're saying FAQ is still in place, but you've got till May 14 to return the funds if you decide you don't want the funds, the loan, or if you determine you don't really qualify for those loan funds and you want to return those without any further action. And meanwhile, in that 7-day window, the SBA will be issuing more guidance on the certification process, some of the forgiveness process, and then even more clarity. One of the things we talk about a lot is the 56 days, the 8 weeks, the incurred and paid. Those kinds of questions we hope to get a lot more definition on in the next 7 days.
So we hope the information that we get actually clears things up instead of creates more ambiguity. A reality of this fast-moving process is it seems as if each time the SBA clarifies something, it creates more questions, and that's just the world we're living in. Am I right in saying that, Stan?
Absolutely. And so what they're doing is the more they answer the big global questions, certainly as you get more narrow, it requires a lot more definition on each side of whether it's a small business, for-profit, or a small not-for-profit. And then even within a not-for-profit, if it's a religious institution with clergy nuances, then those keep bubbling up with requiring more clarification. But just because of the time pressure, again, the SBA is still dealing with what we would call the global issues that affect all loan recipients. And on the ones that have the greatest time commitments, i.e. payroll, we'll see a lot more information coming through on those. Some of the other ones that were just ambiguous, that were easy to solve, such as the auditing of the funds, that has really pretty much resolved a lot of the questions that, they will only be auditing loans greater than $2 million. And by the way, the loans do not fall under the uniform guidance requirements. That being said, the specifics here are, if you did get one of those idle loans, then those idle loans do qualify within the uniform guidance audit requirements. And that would just be a subset of a larger threshold amount that you would have to match. And we can talk about that later if there's any interest, or if the questions come up today.
So, Stan, one of the things that I've gotten questions on is, are there any legal consequences, meaning criminal consequences, to taking this loan and having the SBA come back and say, you shouldn't have taken that loan. I'm just going to summarize what I heard Ted, who's an attorney from CapinCrouse, talk about. And he said essentially the risk of that is fairly low. The greater risk to churches is that they will not find forgiveness for all or part of their loan. And that's what they risk if they're found to have excess liquidity and don't pass the examination that their banks will have to do in turning in their loan application. Is that a fair summary?
That is a fair summary. So, and again, just the high level bullets, the criminal prosecution risk is very, very low. And certainly probably would not even start below the threshold of that $2 million audit threshold to start with. We actually think that, some of those comments are more a public response to the public outcry to some of the abuse we saw with some of the large companies taking those dollars that were really intended for the small business owners. But I do think that certainly, within the loan forgiveness, there will be some issues there that, we'll want to really look at and making sure we maximize those. I think the more clarity we get in the next week, next couple weeks, will certainly influence what that looks like. The other piece that, was certainly coming in was just, the need versus the financial crises. And so, we've got, again, some great comments on that. And we think that most churches, most ministries, most not-for-profits will fall within those safe harbor rules, if you will, the guidance that we have to date, that the financial uncertainty that's been created along with the financial need is also there, because most not-for-profits and churches do not have access to capital raising, if you will, as you would in the for-profits. You may or may not have a line of credit that you may or may not want to tap into. And you may have some reserves, but very few not-for-profits, churches have such significant operating reserves that are beyond reasonable. We all, within our firm, we would certainly suggest a 3-month, 6-month operating reserve is not too much. As a matter of fact, we would even consider a 1-year operating reserve to not be too conservative. So, you start looking at those numbers as a percentage of your operating budget, that allows you quite a bit of financial stability, because even if you have that, you wouldn't necessarily use it immediately in a time of crisis. You would use that as part of your fiduciary stewardship to ensure that operating reserves long-term, well into the fall, winter months, past the summer slump, and year-end giving at the end of 2020.
So let me see if I can summarize this accurately. The risk of criminal prosecution for church loans seems to be very, very low, at least in the opinion of attorney Ted Batson, who works for CapinCrouse, which, by the way, CapinCrouse is the largest U.S. accounting firm that focuses purely on churches and nonprofit organizations. So with the risk being low, this May 14th date is not really significant to turning back funds, because what I hear you saying is for most churches, if they believe the uncertainty required, warranted them taking the loan, that they should stay with it and evaluate their position in regard to forgiveness, because the downside is only having a 1% 2-year loan.
Correct.
Okay.
And so as part of that, we would also encourage as a best practice that you memorialize, you document these conversations. So certainly if you have some board minutes, some elder minutes, that you discuss the situation and the rationale for applying for the loan. I think management, if you will, senior leadership of the church, along with the the back office, the business, church administrators, church executive pastors, agency leaders, should be documenting on a regular basis that we would, here's what our operating reserves policy is, whether it's formal or implied. Here's where we're currently at and where we're maintaining. You're tracking your documentation for that, including even if it's not a serious conversation, the fact that you're actually taking action, but the fact that you're having conversations that said, We may need to reduce our headcount. We may need to furlough employees. How many, we might need to reduce payroll generically by X dollars. Those conversations, the fact that you had them, should be memorialized so that you've got ample, what we call contemporaneous documentation of the circumstances at the time. Certainly, the further we go into, this uncertainty, we will have more certainty, but let's go back to March when all this was happening and shelter in place was just happening. Churches were no longer able to meet on Sunday mornings face to face. All that uncertainty was the period when we were applying for the loans. Document what was going on at the time, the thought processes, the discussions that were being held, and then continue to document those in a brief email to yourself or a short Word document to yourself that you can print off or file away that says, as of this week, here's where we're at with cash flow management, with our fund balances. Here's what the offerings are looking like. These are what our expenses are looking like. Here's the impact we're having in the community. All those things will help document both the financial uncertainty and the financial need and how you're making your decisions so that you have plenty of documentation that will only help improve the odds or improve the probability of having this loan forgiveness as we're still waiting for all the clear guidance to come from the SBA.
Thanks, Stan, and we're going to cover that in a little bit more of a systematic way here in a second. So on the FAQ 31, the good faith certification guidance, essentially these are the recommendations that CapinCrouse is making. You want to touch those briefly?
Sure, and so I mentioned that already. So the current business activity would have been what was going on in March and April that led you to apply for this. That's part of that good faith. The uncertainty of not having a congregation, you want to document that. The ability to access other sources of liquidity. Again, you can't go out and raise capital. You're a not-for-profit. Did you have access to a line of credit? Do you not? What are your policies around using it and the availability of it? And including the policy, you don't want to use all those up now because you might need them this summer, this fall, this winter. So document the rationale for, we either have it, we're trying to get it, we may already have it and we're tapped out, or it's part of our cash flow management. We have a line of credit, but we need it through the summer months. All those things document both the uncertainty and the need, the ability to access additional funds. Recognizing again that most churches have a summer slump and you have significant giving at year end. So those are all part of your cash flow business process management. And again, certainly if you have liquidity, if you have an endowment, if you have restricted funds, again, the SBA doesn't always fully appreciate the fact that you may have money in the bank, but it's not available for use because it's restricted for a donor restricted intent, and you can't violate that part of the law either. And so if you do have reserves and they're available, doesn't mean you have to use them for payroll. Let's say you have $500,000 or $1 million of operating reserves, you wouldn't just automatically start depleting that to maintain payroll. Otherwise, if the loan wasn't available, would you have been considering laying off staff otherwise? Those are all part of this good faith certification documentation process.
So in summary, in your first interview with us, webinar, you went through about making your case for the expenditures. Essentially, you said, create a list of expenditures that you believe are forgivable. Horizons did that, and we had our CPA look at it to make sure that we were looking at the appropriate expenditures. And then as we made those transfers over, we documented or are documenting our reasoning and rationale for all that. So that's making the case for the appropriate expenses. You are also now, in response to what's come out with FAQ 31 that talks about liquidity testing, you are saying you want to make the same kind of documentation basically looking at what drove you to take the loan, taking all of your sources of liquidity and justifying what your restricted accounts are, why you need those unrestricted balances, and the conversations that rather than simply spending those unrestricted funds, the church alternative would have been to lay off staff, which the PPP loan is intended to help with. So this is about making a case both for the expenditures and both and also why you took the loan, and if you do have liquidity resources, why you're choosing not to use those instead of the loan.
Absolutely.
Perfect.
One other thing we would encourage as part of that whole best practice, and as churches, we should be doing it anyways, and we do that with our church clients now, is where we do their accounting work or work with their audit side, either way, is you should be tracking your giving. You know, certainly churches, you know, you've got a dedicated giving pattern, for example, you know, 52 weeks, week 1 of every year. How is that looking from prior years to your current year? What are those trends looking like? And if you're already doing that, make that part of that package that shows the volatility and the impact of the and uncertainty of the giving right now. You know, it may have been in the first week or two as the church was not meeting regularly and people thought maybe we'll be coming back, and you know, churches were missing some of the tithing and giving that would normally happen in a Sunday morning service. That volatility caused the drop immediately in March, potentially. But then in April, it regulates and people realize, okay, we are going to have to move to online, or we will have to start mailing our checks. And they do get caught up. And by April, you realize we have been made whole. You didn't know that back in March. So now, you know, you need it for operations anyways, but this will also solidify the good faith certification that here is the volatility we were experiencing at the time we applied.
So Ted Benson, your partner we referred to earlier, was in the interview that we did that's available on in Giving 365. Wrote an article. Now, he obviously didn't write it in the future on May 20th, but he wrote an article, PPP Loan Good Faith, What Now?, that takes a deep dive in each one of these different 6 areas. So if folks want more specific information about how to compile this information to make their case for forgiveness, it's in that article. Stan, you've been talking about several of these. Is there anything, any other points that you want to make to our viewers today about documenting in these 6 areas?
I think this really summarizes it well, Joe. Again, as you mentioned, Ted's article goes much deeper on each of these items. So this is just a great summary. Again, throughout our opening dialogue here, I've tried to cover these in a more narrative process. So yeah, great summary.
So Stan, you mentioned earlier about the Uniform Guidance Compliance Audit.
The clarity that we got again on this would be FAQ 43 that just came out last night, I think it was. The clarifying item is that all PPP loans are exempt from uniform guidance. But the clarifying footnote is that the economic injury disaster loans, those EIDL loans, are subject to the uniform guidance audits, because those do fall under what they call the Federal Financial Assistance loan process with the SBA. And that threshold is if you receive any funding from the federal government around financial assistance greater than $750,000, that has to be audited. So currently the EIDL loans, the economic injury disaster loans, were typically the $10,000. So you would need to have other loans that aggregate in total for your organization greater than the 750. So again, the risk to most churches and organizations is you are not subject to the uniform guidance audits that are very, very precise, so formerly known as yellow book audits within the audit world. But the PPP loans generally and comprehensively are not subject to the uniform guidance audit requirements.
Thanks. All right, so now we're to the part that many of you are excited about. Let's jump into this question about the 8 weeks incurred and paid. I see that's our number one question here. Is to do with the timing of those. By far, the heaviest source of questions that we're receiving. Can you speak to that and in what guidance you believe will be forthcoming from the SBA on this?
Okay, so and let me just take a couple questions and put them in here together. Again, all of this is based on a cash basis, not an accrual basis. And hence the 8 weeks is really, really important. And more specifically, it's what we call 56 days. 7 times 8 weeks, 56 days. So from the date you receive the funds, you count out 56 days, and that is the time period for the loan forgiveness within payroll specifically, as well as, you know, all the forgiveness areas. So with that, certainly, you know, within the church world, especially if you have a preschool or any kind of a K-12 Christian school associated with your church, that really becomes a very problematic issue as we're winding down the school year or the preschool season, if you will, and we're now getting into June, which is going to be part of the 56 days. If you're getting your funding in May or haven't gotten it, you anticipate getting it soon. How does all this play out? Currently, we still don't have all the clarity around the incurred and paid, except it is cash basis. And again, without going into all the details, Joe, unless you want me to rehash that from some of the previous webinars, the idea is certainly it's got to be a pay period associated very closely to when you receive the funds, paid then. Certainly, you know, being able to use the funds all the way back to February or March is off the table. What we're hoping for right now, and we anticipate with the FAQ 43 that came out yesterday, and the next 7 days, we will get more clarity around this payroll provision, the 56 days. That would say if you received your funding on the 14th and you had a payroll on the 15th, can you actually use the 15th payday and either 7 days or 14 days prior to that as allowable, even though it wasn't incurred until after you got the funds, it was paid after you received the funds, or conversely on the backside. But certainly we are trying to look at that. And then the other piece that plays into that is normally in many of your educational settings, the K-12 world, as school winds up in May, most faculty staff are paid on a 10-month or 12-month cycle. So those payrolls would continue on even if school has now let out and adjourned closed for the year. For those who have closed early and you've laid off, maybe more specifically with preschool, if you've already closed your preschool early, you furloughed or terminated your employees early, that we are expecting some provision from the SBA that will take that into consideration, especially for those seasonal educational employee and employers. There is no guidance yet, but we anticipate in the next few FAQs that we will get specific guidance. But as we've already discussed, we've gotten 12 FAQs in the last 7-10 days, and we anticipate a similar volume in the next 7 to 10 days.
So the answer is there's not a good answer. Right now, people are frustrated trying to do these calculations, putting square pegs into round holes. Your trade organization, along with all the other CPA trade organizations, are pressuring the SBA to put out some common sense guidance. It's widely believed that they will. They simply haven't done it yet. So there's no way to answer this question definitively.
Correct. That being said, let me come back to the opening statements. Number one, it's a loan. Number two, the intent was to help offset employment costs. So if you don't have any employee expenses during that 8-week period, then the funds received are still a loan. It may not be forgivable because you didn't spend it on that amount based on the timing. And so part of the appeal is, if we're not getting the funds until May, can we retroactively use it for April? And the fact that there was such a delay in the funding in round 1 to round 2, the delay in the volume, et cetera. But the reality is, at the end of the day, it is a loan. And it was for loan forgiveness for this 8-week period. And if you don't have any payroll expense in that week because you closed school early and you're not paying any, the loan forgiveness for payroll that wasn't paid, it becomes a challenge to overcome. So from a conservative perspective, that's why we say keep the funds in a separate account. If you're not using it for the intended purpose, you now have the opportunity to either return the funds or use it as that loan and pay interest on it.
So this is catching a lot of churches who have preschools, and the preschool year is going to end. They applied for the funds and they have those teachers in there, and so they're recognizing that they may not be able to incur and spend all of those dollars because now it would take them into June when their normal preschool is gone. So it's likely that many of the churches that made decisions to continue to pay their preschool workers aren't really going to be fully reimbursed for those funds.
Unless, again, if they are continuing to pay them, even if they're closed, if they're incurring the expense within that 8-week, 56-day window, that could be forgivable, even if the preschool is closed, specifically using that case. And in that case, you know, one of the questions that's come up is, what if we're paying for somebody and they're not working? The reality is the provisions still say it is still forgivable as an, you know, if you still meet all the other criteria. But from a stewardship perspective, Joe, one of the things we would encourage is, as a church, if you receive the loan funds and you are indeed paying somebody, from a stewardship perspective, there is so much the church can use. Even if you, for example, the preschool workers, you have a closed preschool and you're paying the workers, find something for them to do that would benefit the church and the community, such as sending out thank you notes or giving them a list of names to call in the congregation or the community, maybe those who are the most vulnerable, and check in on them. Maybe they can volunteer and help with one of the local ministries and represent the church. There's some, you know, maybe we've got some clients who are taking some of their preschool workers and or cafeteria workers from their private school and having them do some painting and maintenance in the building where they're still socially distant. Things that needed to get done are beyond their job description, but people are saying, I'm being paid, I'm willing to do and help something. Maybe it's documenting procedures you've never had time to document before, getting caught up on filings. If you have a church library, sorting through the library, getting it cleaned up. There's a lot of things you could do that you wouldn't have been able to do otherwise. So if you are paying somebody for a job they can't do, there's still other things that can be done from a stewardship perspective. So it's not just a freebie otherwise, if you will.
I'm going to come back around one more time and make a statement. I want to make sure that it is correct, because they're just, I probably gotten over 100 questions sent to me on this. If I am running a preschool and we normally quit paying our teachers at the end of May, and on May 1st, I received my PPP loan, I can't go back and recapture what I paid in April. I've got the pay period in May, which would be forgivable, and I can elect to continue to pay those staff if I want beyond that, and that is potentially forgivable. But if we don't continue to pay them through May, I can't, excuse me, through June, I can't use those funds in a different way and have them forgivable unless they fall into one of the other categories.
That is correct. Now, to take that specific case study where you receive the funds in May and you would normally run through the end of May, you can certainly pay your preschool workers through the end of the month, like you normally would.
Right.
And that has the potential to be forgivable. And then we are appealing to the SBA for provision, in this case specifically, that those funds could be retroactively used in April because of the compressed time period and the delay in receiving the funds. However, that has not been granted. There is no provision for it today. We are hopeful that that might happen. And again, Joe, I think that may be consistent with why we're doing these webinars consistently now. As the news comes out, we want to be one of the first to join you in saying, here is the latest news, and it has been granted, or no, it was not granted.
And let me make a plug for CapinCrouse. You guys, because this churches and nonprofits are your singular focus, you guys are, through your trade organization, working hard trying to press the SBA for guidance that is favorable to churches. You guys are essentially lobbying on behalf of nonprofits and churches to try to get rulings that are helpful. Is that accurate?
That is correct. So
right.
we are thought leaders within our profession, within the AICPA. We sit on the various committees. We are joining with them to if you, like you said, lobby and represent the faith-based community, the churches, the not-for-profits, the Christian colleges, universities, seminaries, the mission sending agencies, denominational agencies that we represent, either as clients or as a community, to make sure that the interests of our communities, if you will, our faith-based communities, are fully represented.
Well, on behalf of churches and faith-based organizations, thank you for your representation for our causes. Let's move on just very quickly. Still get a lot of questions about wages, what is permissible, what is not permissible. Could you just briefly cover the wage provisions that are permissible and are not permissible?
So any employee wage is permissible. It's on payroll. Certainly their payroll taxes, the benefits that they receive are permissible. If they, as part of their compensation, there is normally a bonus as part of their work, that's permissible. But just to grant a bonus randomly because you got a PPP loan is high risk, and we would not recommend doing it on that provision. That being said, if you're coming up to the end of your fiscal year and there's a performance bonus, for example, for leadership within your church structure, your school structure, otherwise, and you've got records of that being a normal payroll cycle activity from year to year, that could be permissible, but it's got to be a reoccurring, predetermined, pre-established practice. Here's what is not permissible. Workers' compensation is not permissible because that's not a cash benefit to the employee. The employer's portion of the payroll taxes, and again, I want to be really clear here, you can use, and I'll be very, very specific and deliberate with my language and my words. You can use the PPP loan funds to pay for the employer portion of the payroll taxes. It is allowable, but it is not forgivable. So if you use those loan funds to pay your portion as a church or as a ministry, the employer portion of the payroll taxes, it is allowable. So it would not be considered fraudulent, but it will not be forgivable. So let me say it one more time. If you use it, you're borrowing the money to pay payroll taxes, and you'll either repay the loan with interest. And I don't know how to be more clear than that, but it is allowable. So if you find yourself in a cash flow crunch and you don't have the money to pay for the payroll taxes that you owe as a church, you can use these funds to do so, but you will have to repay those. And that's, pretty much encapsulates all of the, the wages and benefits portion of that.
What about housing allowance? A lot of questions about housing allowance, a lot of confusion with banks. Horizons, our banker did not allow us. We were one of the very first loans funded, but our banker would not submit it with housing allowance included for our clergy. but the SBA has since given guidance that it is permissible. Many of the churches have taken your writings on that to their banks to help the banks understand. Is there anything that churches and nonprofits that are paying housing allowance out to clergy need to know about the way those funds need to be paid?
So great question, John. By the way, just part of that confusion was early on, most churches and many banks, I'm sorry, the SBA and most banks really didn't understand the clergy and housing issues. And so on the loans, many of the banks would not allow that. But the silver lining on the cloud, if you will, is now that it has been determined by the SBA in writing as an FAQ that clergy compensation and the clergy housing allowance and or et cetera is allowable. That will only help you achieve that 75% wages and benefits, compensation benefits threshold. So the fact that you weren't allowed to use it in the loan actually now benefits you in the forgiveness portion. Specifically, the documentation would be very similar to what you're already doing. You would use the information from your payroll company and your payroll journals to document that. The biggest caution I would see, and this is really the general statement, is compensation over $100,000 annually is capped at $100,000. So you are not eligible to have the loan forgiveness on wages over $100,000. That would include the housing allowance, because that is indeed part of compensation. So that's that's a nuance we would already know. Here's your total compensation. We're going to have a portion of your compensation as a housing allowance, but it's not in addition to your compensation. It's just how it's segmented. So if a clergy is, let's keep it really simple, is making $100,000 a year, of which $40,000 is deemed housing allowance, the combination together is $100,000 of compensation that is forgivable. If a clergy, let's say, is being paid $120,000 a year, of which $40,000 is housing allowance, you're still at the $100,000 compensation threshold, of which then the housing allowance or the compensation, either way, would be added together, because in payroll, you're still getting the cash for the housing allowance. It's just not taxable. So all those dollars are already included and embedded in your payroll journals, and you'll just need to sort those out. And again, in previous webinars, we've talked about the mechanics and the reconciliation of how to do those dollars together. And again, as a firm, we would be happy to one-on-one with the church, sit down, and if you wanted to engage us, to help you go through that process where it becomes very, very individualized versus conceptual like we do for the 1,200 folks who are on this call right now, where we can't get specific on each church specific nuance globally like this. But on an individual basis, certainly we've got many churches and organizations who are hiring us to help them sort that out to maximize the loan forgiveness.
Stan, is there any payroll expense that the church would bear that is not part of the $100,000 cap?
I am unaware. Certainly, we've had some dialogue, questions come in about the workers' compensation. That is off the table completely, because it's not a cash to the employee. I don't know, for example, the payroll processing would probably be excluded from the loan forgiveness, but it could be included in a use, an allowable use. It's not fraudulent, but we would seriously doubt that that portion would be forgiven. That might be the only other expense associated with payroll. Otherwise, again, well, here would be the other one. Certainly the contributions that employees make to their 401k plan or 403b plan is allowable and potentially forgivable. Any match for the employer is still to be determined.
Great. Well, let's move on to, we're going to call it the speed round. I have gotten so many questions about occupancy expenses. what's permissible, what isn't. I've got a whole list of them here. And so I'm just going to call them out. You say yes. And when I say permissible, let's just use the word forgivable. Is this a forgivable expense under the occupancy portion, that 25% that is set aside for those? I am assuming that it has to be incurred and paid in the same period?
That is correct, within the 56 days currently.
Okay. All right, here we go. Electricity,
Yes.
gas,
Yes.
water,
Yes.
sewer expenses,
Yes.
trash expenses,
Yes.
internet,
Yes.
landline telephones,
Yes.
cell phones.
Yes, if regularly expensed and or reimbursed to those employees.
All right. Office equipment leases like copiers and such.
Yes.
Trash removal.
Yes.
We already talked about the workers' comp liability insurance, fire alarm monitoring.
No, unfortunately, that is not.
Boiler inspections.
That is not.
Testing of alarms, boilers, or other expenses required by the city.
Those are not.
Okay. Loan interest on pre-existing loans.
That is allowable.
All right. Well, that exhausts the list of the 26 folks that contacted me yesterday to present to you. We have done that. I'm going to now look over.
Hey, Joe.
Yes.
Can I interrupt for just a second? One other question that we've seen coming in with some regularity, and I was just on the phone talking with my tax partner, Ted, about it, on liability insurance. The answer on liability insurance is typically it is not allowable unless it's embedded in an existing lease or rent payment that the landlord has provided that coverage for you. And if it's part of the regular lease payment or rent payment, it would be, but as a separate policy, any kind of an umbrella, property casualty, liability insurance, none of those are included. So I just thought I'd go ahead and answer that one now as well. So thank you.
Well, I just thought of one more. People with annual bills can only pay 2/12 of their annual bill. Correct?
Actually, that is not correct from the standpoint that it has to be incurred and paid. So unless you're actually paying it in that 8-week, 50-day period, then you might be able to carve out the 56 days. But the fact is, because normally when you think about a prepaid or an annual paid, that becomes an accrual versus cash payment. So those typically are no.
What about if your annual bill comes due in this 56-day window?
Then the incurred would be the 56 days and paid would satisfy, but you'd have to do a reconciliation. And that would be one I would say has potential to be forgiven, but it may not, because again, most of those annual pays probably are not in the qualifying area, i.e. most of those annual pays are going to be some type of an insurance policy. And the answer to most insurance is no.
Okay. All right. So Cindy asked this question, and she's got 115 of her friends online with us today, also wanting to know, we received our loan under the original program. Are we now subject to the new program laws for forgiveness?
Great question. And so we would start by saying, on the certification of good faith, you are under the application that you applied under. And as those have been refined, you can opt to give those funds back May 14th. The reality is the loan forgiveness provisions are still emerging, and we will all be under what those final rulings are and the FAQs are as they come out. So for example, we're still trying to figure out under payroll, the 56 days. That final ruling we will all be under that guidance when it comes out, because until then, we're all in an ambiguous state. So yes, we will all be bound by the loan forgiveness provisions, whether it's the final ruling or the FAQ as those are rendered.
All right. Robert asked this question. Have they defined the needs basis as far as cash reserves? We have some cash reserves right now, about $100,000, but like many churches, our attendance and giving is falling off a bit. You probably answer that, but do you want to summarize it again for Robert?
Yeah, I think it's, consistently we're saying a 3-month reserve is totally acceptable and justifiable. A 6-month is ideal and a best practice, if you will. And then you get above that, then you want to make sure you've got clear policies for why you have it and why you're keeping it and why you would need that. And that would certainly fall under that needs base. But right off the top, without knowing anything else about the church, $100,000 operating reserves is not an extravagant amount.
All right. So Chris is asking this question. You spoke on the video about FTEs. We have nursery workers, musicians, preschool workers, which are all part-time. We included all our personnel in our loan calculations and in the payments of the proceeds. How do these part-time FTEs affect loan forgiveness?
Great question. And we don't have complete guidance on this yet. We're expecting another FAQ. And again, just without going into details real deep, we covered this on the previous webinar that somebody can go back and look at. The loan application was literally the number of what we would call beating hearts on payroll or the number of Social Securities. It was the total number of, again, the number of W-2s that you're going to be issuing at the end of the year, regardless of the hours, if they're a temporary worker, part-time or full-time, salaried or hourly. The interesting mix is when you shift from that in the loan application to the loan forgiveness certification, they have shifted intentionally from total number of Social Security numbers to FTE equivalent. The challenge we're having right now is the SBA has 2 methodologies that they use, and they've not identified which one they will be using. On top of that, there are 2 different periods that you as the borrower can select which one makes the most sense for you as a church or an agency, a ministry. And so if you think about it, there are now 4 options, 4 different calculations you can run to maximize that part of the loan forgiveness, which is maintaining headcount. So the 2 are your options to pick from, and we would absolutely advise you to, as you get closer, run both those scenarios and pick the one that benefits you the most. Now, some organizations, as we talked before, if you have the time and are interested and you're motivated by this, you can actually try both SBA calculations, and we've given you that information, the technical formulas for that on a previous webinar, and the resources are available on the links that Joe's mentioned. But certainly within that, you could run all 4 of those calculations yourself, or you can just pause and wait for the clarity to come out, and then we'll run the calculations then when we have certainty on which calculation the SBA is going to use. And it would not surprise me personally, as well as professionally, if the SBA were to come out with a different calculation for the FTE, or revert back to total number of Social Security numbers, because again, as we talked at the beginning, the whole idea was to protect the payroll, to protect the number of employees. And that's an important part of that forgiveness is, were you able to keep all these employees employed?
So Daniel asked a question. What are the ramifications if we only use 2/3 of our approved maximum loan amount? Does a 75-25% rule for wages apply to the amount actually used or to the approved maximum loan amount?
So it is a combination of all those. And again, in a previous webinar and in the resources, we actually give you case studies in the write-up and the articles on how to calculate that. But it's not an all or nothing. So let's say you have spent on the 75% of your loan is supposed to go to payroll, and you've only spent 70%. Then you would then take the difference of what you've spent versus what was the threshold and arrive at that number, and then you subtract it from the loan, and that becomes the part that is not forgivable. And so there is a calculation for that takes those percentages along with the actual number of what your loan is and walks you through that process to calculate the difference. So it's not If you don't meet the threshold, you don't get any of it forgiven. The portion is forgivable up to that, that threshold to maximize that forgiveness.
So Bill asked this question: how do we account for cost other than labor? For example, a utility bill paid in May that applies for a period that's in April.
Great question. Again, that, we normally associate the incurred and paid with payroll, but the same is absolutely true of, utility bills where, the utility company pays them at a certain time. Certainly for now, on that last utility, I think we talked about it on the last call as well, Joe, where, as soon as you get the bill from the utility company and you're within that 56 days, we would certainly say, hurry up and pay that to make sure you're in the 56 days on the back end. We're still waiting on an FAQ from the SBA on the first one when it comes in to make sure that, it falls within that window. But we would assume, we're hopeful that when that utility bill comes in that's standardized, there is an understanding that, the cutoff date of a utility company is different than the SBA cutoff dates. And they're going to allow that because it's within reason. And I think we all agree that the intent that the SBA had was that in this case, if you get a bill in May and you received your money at the end of April, let's say you got the money at the end of April, the bill comes in on May 4, and the period for the bill from your utility company was for April, that it would be allowable. What they don't want you to do is pay a January, February utility bill versus a concurrent period within a reasonable number of days. That's really the overarching intent, but we're still trying to get the clarity of specifics because that's what everybody's looking for to maximize the forgiveness.
So Cindy asked this question: are the cost of our insurance on the building, software, equipment, software or equipment purchased to perform online services, pest control for our building reimbursable? Okay, so that's a mouthful. Insurance on the building, yes
No.
or no? Software or equipment purchased to perform online services.
I don't know that that's going to be forgivable. That being said, a best practice that we're asking our clients to do, and we're certainly wanting to get the word out, is when we talk about, again, the certification in good faith, the financial uncertainty and the need, we are strongly advocating that churches document the expenses that they are incurring and the new expenses. Certainly for churches, we're having to all move online. Is that increasing your bandwidth costs? And that's certainly allowable. But you're having to buy additional equipment and additional software to be able to do all your online services, your editing, your production value. And not every church had all that set up in advance, and now they're being forced to. We certainly think and recommend that churches document all the new expenses associated with being able to go online with church. And that will certainly demonstrate the financial need and the additional expenses incurred to be able to do church online. A second element we think is critical, because we don't know what all the final rulings will be on the loan forgiveness for not-for-profits. We think it's critical for churches, as you're doing community impact and serving the needs and ministering to your community, that any of those additional expenses that you also itemize and keep track of. So for example, if you're delivering food to first responders and healthcare workers at the hospital, if you are providing additional resources to the food bank or any other type of community outreach, these additional expenses you should be itemizing, because conversely, the argument might be made in the future, you weren't on campus, you weren't spending all the money on, on coffee and donuts on Sundays, you weren't having to clean the building every week, so you actually reduce your costs. Well, a strategic thinking church will have shifted those dollars to use in the ministry. And just as my attempt at humor, Joe, you could actually have a toilet paper ministry going on right now. With the toilet paper missing everywhere, most churches have a stack of it somewhere and nobody's using it. You could have a ministry to give toilet paper out to those in the community who need it. And now that, you're demonstrating a way to impact the community through the toilet paper ministry, if you will.
All right. What about pest control for?
No.
Okay, no. Moving on. Are utilities for the parsonage forgivable?
If the church is paying for those, and again, I want to be very clear, if it's a parsonage, that implies it's the church-owned facility, and that would be included, potentially forgivable.
Excellent. A lot of these we've covered. Looking for ones we haven't. I think we've answered this one. We anticipate falling short on expending our 75% for payroll costs. By what means can we award bonuses to full-time staff to utilize the remaining eligible payroll? I know you've answered that question. It actually comes up a lot in questions to me. So I think it's worth covering one more time.
So, Joe, this is really kind of my personal take. That, again, I come back to the broad arching statements and concepts. This is a loan. This is intended to maintain employment. Again, I'm going a lot more detail in previous webinars of trying to maintain employment versus the instability and the disruption of laying people off and hiring them back. And so at some point, if we're trying to maximize the forgiveness by offering bonuses that wouldn't be paid otherwise, and the whole idea is maximize a loan that was given to us, I don't know that that always falls in good faith. I understand the question, and I certainly am not implying any kind of judgment on this, but it's more of a descriptor that it doesn't fall within the intent of the loan to keep people employed. And I would use the acid test of, if you did this and it ended up on the front pages of your local newspaper, that you as a church took these funds and you paid bonuses with it, how would that be viewed in your community beyond any other legal ramifications that could come from it? I would certainly say, if it's not a regular part of the payroll process, that you're adding risk and uncertainty to both the forgiveness as well as just the being tried in the court of public opinion.
So Mary asked the same question, little different twist. Can we give COVID bonuses to workers that continue to come to work through this? I think you just answered that. If it's just a bonus to spend the money, some churches may actually be having to pay bonuses for to retain workers in environments where they're at risk. Can you speak to that?
So certainly, if you again, it's very specific to the church, and I'll reference my earlier comments. What's the intent? What's the motivation? If you actually have church employees who and I'll give a case. I've mentioned volunteering at maybe at the food bank. If you now have employees who are working in a public health clinic for those who are underserved, underprivileged, or they're working at a food bank where they're now putting themselves in harm's way, and you can't mandate they go, but somebody's willing to go. There are provisions for hazard pay for putting yourself in harm's way. For example, I just got just now on the call, got an update from my partner Ted that there's some discussion right now in Congress on the next tranche where there will be some additional funding that will be separated out for hazard pay for first responders, healthcare workers, and those who have put themselves in harm's way for the good of society. And so as a church, and you do that and you spell it out, and it's very, very clear that it's because of what we would call hazard pay associated with the duties that they assigned to. But I certainly would not see that just claiming it a COVID-19 bonus to give it to everybody without a hazard pay to it would probably not go very far under scrutiny.
Okay. So Kathy asked, is paying a 1099 person who's needed during the COVID crisis forgivable if it's paid with PPP money?
I don't know that it would be forgivable because there's no provisions for 1099 within the PPP loan structure. That being said, if it's already been done, that needs to be, again, maybe more of a one-off engagement conversation. But conceptually, you know, that might be a better use of strategically to say, you know, we're going to bring them on as a temporary employee for 30 days, 60 days, where they're not eligible for benefits yet, and they know it's temporary employment versus a permanent employment. So you can still bring them on as a part-time, temporarily hourly employee where you're actually paying the payroll taxes for them. That would certainly be allowable and forgivable. Whereas a 1099, there is no current provision for that.
So we have a question that asks about leases for equipment operating versus capital leases. Any difference there?
There is not. You know, if it's equipment that the church is using, again, going back to whether it's computer, servers, you know, copiers, et cetera, those are telephone systems. Those are all currently accounted for and allowable and potentially forgivable.
So a question about contributions to a SEEP retirement plan as forgivable under the payroll expense?
It would be if it's a formalized retirement plan, a SEEP like that, you know, as long as it's meeting all the provisions otherwise and it's a standard process, yes.
Do we absolutely have to put the funds in a separate banking account? Isn't our accounting software enough for tracking purposes?
It is. There is no mandate to set it up in a separate account. There really is not. We recommend it as a best practice to remind us that it is indeed a loan. So we try to think of it in terms of a line of credit where it's segregated, kept apart, and then as we use it, and as we recommend and work with our clients, that as you use it and you put it into your operating account, under the intent that the plan is that it will be forgiven, then the remaining balance we now know is potentially a loan that we need to either repay immediately or hang on to and pay the interest on. That's just an extra safeguard that we believe will make the documentation process easier, that will ensure the accountability and stewardship of the funds and keeping them available to repay as a loan as quickly as possible, and help us maintain that loan balance, if you will, of what we've used, what's remaining, what may be forgivable, what may not be. And by keeping it segregated for that 8 weeks, just provides the greatest clarity and is indeed a best practice. But again, it is not mandated and it is not required by the SBA.
So just a couple of more questions, Stan, and then we're going to close. We're running about 15 minutes over, but want to try to get as much information out as we can. If we have an employee who voluntarily terminates during this 8-week period of time, is that going to affect our forgiveness? And do you have any special documentation requirements? The other side of that is, are there any strategies like hiring a temporary employee to fill that gap until you can go through the recruiting process? So
great questions. And I might even expand on that because, again, there is some new information just coming out on that particular piece as well, Joe. So if an employee resigns and does not come back, we're expecting there will be some provision to not penalize the employer for that. Certainly, if you can offset that vacancy and fill it with someone else coming in, even if it's a temporary hire, that mitigates any of that exposure. But again, going back to what I keep saying, this is a loan, and it's to help pay for payroll. And if you don't have a payroll expense, it's hard to forgive an expense you didn't incur. Now, the other interesting thing that we're starting to see and experience with clients, and let me just create a scenario real quick. Let's come back to the church and a daycare. Let's say you've furloughed your daycare workers, and now you're ready to, because you have a loan and you're going to have a summer program instead once you're able to open up, and you offer to bring the employees back. And what we're seeing and hearing both in the media as well as experientially, not only within our client base, but beyond, where an employee will say, you know what, I'm actually better off to not come back to work because my current unemployment and the stimulus that comes with that is worth more to me than what I was being paid by the church. I am not coming back to work until my unemployment runs out. Which is a fascinating position to take, which makes it hard for a church who's trying to get their head count back up, and they've got the money to hire somebody, and somebody's refusing to be rehired. There is provision coming, we believe, and we're working on that, where there will be some kind of guidance or an FAQ to come soon that will not penalize the church, but there'll need to be ample documentation of the separation where an employee was laid off. You will need documentation that there was a good faith written offer for them to return to work, and you'll need to have documentation that the employee turned down the offer to return to work. And there will be some provisions that will be made to not penalize the employer, the church, for doing everything they could to re-employ those employees. We don't know what that looks like yet, but there is some provision coming to offset that for the church's efforts to re-employ those who have been laid off. Stay tuned.
Stay tuned. All right. Well, the final question really is one, a basic accounting question. Got a viewer who's asking, should this be booked as a loan until it's forgiven?
Yes, we absolutely. So again, we'll talk technical. You should credit a loan, and we would suggest keep it simple. The SBA-PPP loan, that's a liability on your balance sheet. And then the cash goes into your cash account. And if you've opened up a separate bank account, then you call that your SBA-PPP bank account. And that becomes your offsetting debit and credit. Then as you're expending the dollars, you are then transferring cash from your SBA bank account into your operating account. Otherwise, it stays the same. Your expenses stay the same, but then you're tracking these in a separate spreadsheet with your reconciliations of the amount that could be forgivable. As you do that, then, again, we're suggesting journal entry number one would maybe the payroll entry for that first pay period, the amount that is forgivable, and you enter that as a SBA-PPP loan forgiveness contribution as revenue. And then that'd be your credit, and then the debit would be to go against that loan, recognizing that it's provisional, that it may have to get reversed if the loan is not forgiven, but we're going to go under the assumption it will be. And that process then allows you to document how much of the loan's still there, especially if you don't have a separate account, and it allows you to maintain all your operating expenses otherwise. You're only introducing conceptually these 3 or 4 general ledger codes to account for that loan, and then the forgiveness as it is incurred. And then certainly the interesting thing is, hopefully if you're on a calendar year basis, all this will be resolved before the end of the year. If you're at June 30, you're going to be crossing over where you may have your full 56 days completed. You've applied for the loan forgiveness, but you don't know. And at that point, you would enter it in your books as if it is forgiven. And if you have any kind of a audit review or compilation, in the footnotes, there may be some provision that it has not been determined by the SBA yet. There's 60 days coming. That may be resolved before your statements are issued. But I would certainly, in your financial statements, attribute the amount that you believe will be forgiven in your financial statements as of that period, especially if you're closing out your fiscal year.
Stan, thank you. This was very helpful. I scanned the rest of the questions. I think that we have essentially answered those in this webinar or in a previous one. If I missed it, I apologize. I appreciate you being with us today. I put your contact information up here for in the event that a church wants to retain you all to give them some specific guidance on a unique circumstance that requires your level of expertise. Any closing comments you've got for us today?
Again, Joe, thank you again for the opportunity to partner with you and Horizons Stewardship. We're just delighted to be able to work and serve churches together, and looking forward to the next time we get together to talk about the updates since today and
Well,
getting more clarity.
Right. So we may not have that webinar scheduled. It's really going to be timed around additional information. We do have one scheduled that's more forward-looking, but just there will certainly need to be additional webinars that help you once we get more definitive information, and we've covenanted to bring those to you as that information presents. Thank you, Stan. Thanks for the technical help with Latricia and Kim in the background. Thank you, all the churches that have listened in. This will be available by tomorrow. You'll get an email telling you how you can download it. Feel free to share it as widely as you would like. From Horizons Stewardship, thank you very much. And